The easiest way to explain it is to imagine a safety deposit box containing a Krugerrand listed on the JSE. That, in essence, is what a Krugerrand Custodial Certificate is. We don't have actual safety deposit boxes containing Krugerrands listed on the JSE. How it works is in a vault, we have clearly identified Krugerrands, 1 ounce coins, and each coin is then represented by a certificate on the exchange, and that is what is traded. The big difference is when you have a Krugerrand, a physical Krugerrand, there's a bit of a hassle in terms of storage and insurance, firstly. Secondly, when you have a hoard of coins stored at your house and you need liquidity against that, you want to make it into cash, it's somewhat difficult and problematic. First of all, you need to find a buyer on the other side, and then there's a bit of wrangling about the price that you're going to be getting for it in terms of numismatics, premium, etc. Now, the benefit of having the coin on the exchange is we store and insure the coin on the investor's behalf, and secondly, we provide full liquidity against it should you wish to exit. Now, to see the utility, or to get a good feel of what the utility of that liquidity is, when you deal in physical coins, there's typically, when you sell the coins, most of the dealers are only happy to give you the bullion value of the coin back. However, when you purchase the coins, you pay up to 4%, well, depending on your dealer, up to 17%. As a numismatic premium. So you can imagine that there's it can be quite a costly exercise if you buy and sell coins on a physical basis. On the exchange, we show typically on a worst case basis a 1% bid offer spread, which means if you buy the coin and you sell it immediately, there's the transaction cost of 1% that applies, which is a lot better than the type of premium or the type of spread that I just mentioned. The typical structure of ETFs worldwide is one of a debenture against the company whose only asset and only liability is gold, and then the debenture is issued against them. So you don't have the direct ownership profile. This product gives you direct ownership. The coins belong to you, ownership transfers on day one. The difference, though, is since it's been vaulted on your behalf, you don't have to worry about the storage factor, and secondly, it's also insured on your behalf. So that is taken care of, and then, as I mentioned, you have full liquidity against that. So it gives you the benefit of physical ownership without the hassle factor. If you want to take physical possession of it, because it already belongs to you, ownership transfers on day one. If you want to get them into your possession, there are one of two ways in which you can do that. If you are in possession of, or if you own more than 1,000 of these securities, you could just phone us up, and we will make arrangements for you to collect the coins at the vaulting company. If you've owned less than that, then it's also relatively simple. Just give us a call, or your broker will give us a call, mentioning the fact that you want to take physical possession of the coins. What we will then do is we will exit your KCC position, and we will trade it into a physical coin, also via the JSE. And then we'll make arrangements for you to pick up the coins at Rand Refinery or wherever. So it's perfectly possible, and also very cost efficient if you do want to take physical possession of your coins. It's a question of reducing or making the trading cost, the transaction cost, as low as possible, firstly, and then secondly, making sure that whatever volume the market wants to trade, we can show a price in that. So at any given point in time, we show a double on screen, which means if somebody wants to buy coins or buy a security, we always have coins available for sale, and if somebody wants to sell, we are always in the market to buy back, and that is a guarantee.